Hello, we're going to be doing some last minute cram. We'll start with Quizlet, and I'll actually have both of them open at the same time. This way, if there's a question on the Quizlet that involves me working out the answer, you'll see me do that. Okay. I had a 5-day study streak. Of course I have. I've done more than 5 days. Look at that. I'm a top creator on Quizlet. I don't know how I got that, but sure. Test. Start test. Jim spent 4 years earning his undergraduate degree at a local university. He began his first year at law school in January of the current year. Assuming he is under the phase-out limitation, what education tax credit is Jim eligible for in the current year? That is the lifetime learning credit. Paula and Isidora are married. File a joint tax return, report modified AGI of 148,000, and have one dependent child. Dante, the couple paid $12,000 of tuition and $10,000 for a room and board for Dante, a freshman. Dante is a full-time student and claimed as a dependent by Paula and Isidora. Determine the amount of the American Opportunity Credit for 2022. Okay. The couple paid tuition of this for Dante. Now, Dante is a full-time student and claimed as dependent. But it's for the American Opportunity Credit. So, first, we need to know the answer. We have in this case, it would be 100% of qualified expenses. And that will be 2,000. That's just something you have to know. And 25% of qualified expenses is what you can take, and that is for, again, 2,000. Because the tuition is 10K. My bad. Is a 10K is room and board. And tuition was 12K. Tuition is not a qualified expense. Room and board is. And the limit is 2K. Therefore, by the American Opportunity Tax Credit, he'll have 2,000 times 100, well, times 1 for 100%. Plus 2,000 times 0.25, and that'll equal 2,500. Some blank are subject to carry over positions. Okay. So I believe that's some some refundable credits are subject. Some non-refundable credits are subject to carryover provisions. Credits are paid to the taxpayer even if the amount of credits exceeds the taxpayer's liability. That would be refundable credits, transferable credits, repairable, detachable. These two are wrong. So it's either refundable or transferable. I believe it's refundable. Credits are not paid if they exceed the taxpayer's tax liability. That would be non-refundable. Santiago and Amy are married and file a joint tax return claiming their 3 children, ages 12, 14, and 18 as dependents. Their AGI is this. Santiago and Amy's child tax credit and dependent tax credit is what? So, we know that if a child's age is less than, is greater than, that's greater than, is less than 18, then child tax credit. Let's use a different color. equals 2,000. And then dependent tax credit equals 500. Therefore, 2,000 plus 2,000 plus 500 equals 4,500. Paula and Isidora are married, file a joint tax return, report modified AGI, so on and so forth. Dante is a full-time student and claimed as independent. Determine the amount of the American Opportunity Credit for 2022. Wait a minute, what was the earlier question then? Paula and Isidora. American Opportunity Tax Credit for 2022. What? Is it the same question? Something's off. That can't be right. Because it would be the same. Unless I'm missing something. Why do I have the exact same question twice? Yeah, what was going on? Oh, okay, so that's that. Wait, but why is it the same question? Hold on, I have to check my assignments, don't I? Yeah, I probably do. Yep, I do. Give me a quick second, I just need to check something. Okay. Paula and Isidora question. Wait, why do I have that twice then? Hold on. Back. Edit. Paula and Isidora should only shut up once. Where did this second question come from? Tax credit equals this. This is blatantly wrong, because this is the correct question. I think that I'm right. Yeah, okay, so this is just a dead question that should not exist. Done. Test. Go. Yeah, I'm very sorry about that. That was unprofessional of me. Santiago or Amy are married. Okay, let's do this again. So we know that it's gonna be 2K plus 2K plus 500 equals 4,500. Can everyone hear me okay? I assume you can. So up next, so-and-so credits are paid taxpayer even if the amount are exceed refundable. What's callable? I have no idea. Now determine the opportunity tax credit. Okay, sure. So 100% qualified. Expenses. That's 2K. 100%, 25% qualified. Expenses. That's also 2K. So it'll be 2,000 times 1 plus 2,000 times 0.25. That'll equal 2,500. Are not paid if they exceed the taxpayer's tax liability. That would be non-refundable. Jim spent 4 years earning his undergraduate degree at a local university. He began his first year of law school January of the current year. Assuming he is under the phased-out limitation, what education tax credit is Jim eligible for in the current position? Lifetime learning credit. Some so-and-so credits are subject to carryover provisions. Be some non-refundable, I believe. Are subject to carryover positions. I think that's refundable. Yes, it was non-refundable the first time. I overguessed it. Sorry, guys. Take a new test. Sure. Okay. Paula and Isidora are married, file a joint tax return, report modified AGI of 148,000, and have one dependent child, Dante. The couple paid $12,000 of tuition and $10,000 for room and board for Dante, a freshman. Dante is a full-time student and claimed as dependent by Paula and Isidora. Determine the amount of the American Opportunity Credit for 2022. So, once again, 100% of qualified expenses. It will equal to 2,000. And then 25% of qualified expenses. And that would be 2,000. So 2,000 times 1 plus 2,000 times 0.25 will equal 2,000 plus 500 will equal 2,500. So pink is definitely not the color. What about green? Definitely. Are not paid if the exceed the taxpayer's rentability, that would be non-refundable. Pay the taxpayer even if the amount of credits exceeds the taxpayer liability, that would be refundable. James spent 4 years earning his undergraduate degree at a local university. He began his first year of law school in January of the current year. Assuming he's under the phase-out limitation, what education tax credit system is Jim eligible in the current year? Lifetime learning credit. Some non-refundable credits are subject to carryover provisions. Santiago and Amy are married. File a joint tax return claiming their 3 children as dependents. AGI is 14,000. Tax credit is 2,000 plus 2,000 plus 500 equals 4,500. Submit. Gotcha. So we've done chapter 13. Library folders. 168A. Now we gotta do chapter 11. Test. Perfect. Passive law rules require taxpayer to segregate all income and losses into 3 categories: active, portfolio, and passive. Indicate whether the following items are as active, portfolio, or passive income for the purpose of the passive loss rules. Interest, dividends, annuities, and royalties not derived in the ordinary course of a trade or business. Wait. Not derived in the ordinary course of a trade or business portfolio. Troy's financial records for the year reflect the following: interest income from bank savings account 900, taxable annuity receipts 1,800, city ad valorem property tax on investments 125, investment interest expense 3,200. Calculate Troy's net investment income and his current investment interest deduction. How is a deduction for any potential excess investment interest treated? So Troy's net investment income is... Okay. And his investment interest deduction is so-and-so. Any potential excess investment interest expense not deducted this year is so-and-so. Okay. So to calculate net investment income, you have to get your interest income from bank savings account plus your taxable annuity receipts minus city ad valorem property tax on investment 125. This is going to be 1800 and this one is 900. So 900 plus 1800 is equal to 2700. 2700 minus 125 will be 2575. Now that we have that, we can say the following. Troy's net investment income is $2,575 and his investment interest deduction is $2,575, period. Any potential excess investment interest expense not deducted this year is carried forward. So next, indicate whether the following items increase or decrease a taxpayer's at-risk amount. Cash in the adjusted basis of property contributed to the activity. So that would increase it because you are giving cash to something. Rhonda has an adjusted basis at an at-risk amount of $7,500 in a passive activity at the beginning of the year. She also has a suspended passive activity loss of $1,500 carried over from a prior year. During the current year, she has a loss of $12,000 from the passive activity. Rhonda has no passive activity income from the other sources this year. Determine the following items relating to Rhonda's passive activity as of the end of the year. At end year, Rhonda has the following. B. Loss suspended under the at-risk rules. Okay, so loss suspended under the at-risk rules would be, let's see. Let's do math, guys. Let's do math. So, we know that she has a suspended passive activity loss. So what do we know? We know that adjusted basis and an at-risk amount of 7,500 in passive activity uh, at beginning of year. What else do we know, guys? We also know that she has suspended passive activity loss. So, suspended passive activity loss of 1,500 carried over. And she has a loss of 12,000. So, current year, loss of 12,000. All right. Rhonda has the following: loss suspended under the at-risk rules. That would be... Oh, what am I doing? This is easy. So what you do is you take the current year loss. So current year loss is $12,000, and you subtract the adjusted basis and an at risk amount, and that would be 7,500. So you subtract that, and you would get... No, I don't think that's right. Because what would that leave you with? That would leave you with... Where's my calculator? That would leave you with 4,500. Is that correct? I don't think so. I really don't think so. Loss suspended under the at-risk rules. Yeah, I don't think this is correct, guys. I think that it would be... Well, then what would it be if that's not it? I'll check after. Indicate whether the following statements are true or false regarding the at-risk limitation. Taxpayer money deduct a loss as long as the at-risk amount is negative. False. Indicate whether the following items are classified as an active portfolio or passive income for the purpose of passive loss rules. Any trade or business or income producing activity in which the taxpayer does not materially participate. That would be passive. Ominous. I love the randomly generated answers. Indicate whether the following statements are true or false regarding the at-risk limitation. The at-risk limit rules provision, which apply to individuals and closely held corporations, are designed to prevent taxpayers from deducting losses in excess of their actual economic activity interest, their actual economic investment in an activity. True. Taxpayers share the activity deductible loss. If you share the activity deductible loss, that probably decreases your risk. Joe owns a non-rental business with two separate departments. Department A generates net income of 70,000. Department B generates net loss of 58,000. Joe participates 800 hours in the operations of Department A and 300 hours in the operations of Department B. If Joe is allowed to treat the departments as a component of a single activity, calculate the amount of Department B loss that can be offset against the income of Department A. Well, let's see here. The most common thing one would do would be 70,000 minus 58. But something tells me this is horribly wrong, because that would only leave you with 22,000 like that, and that's not an answer. And then another thing you could do is do the same thing but with hours instead. So you would do 56 2, 3, 4 minus 58. But that's also wrong as well. So what it really is it's asking you just to use it for Department B. Given he does participate 300 hours, the amount of Department B loss that can be offset against the income from Department A. 58,000. So you know what? I'm gonna check my answer key really quickly, because something tells me I'm horribly wrong here. Okay then. Hold on. Whoa. Not what I meant to do. Taxpayers share the... Let me just check something. Indicate whether the following items increase or decrease. Taxpayers share in the activity of deductible loss. What did I just read? This would increase, okay. Taxpayer may deduct the loss as long as it's negative. That's false, okay. At risk. Okay. That can't be right. A taxpayer's deduction. At-risk rule provisions which apply to individuals. Okay. That would be true. Okay. Taxpayers share the activities deductible loss. That decreases. Okay. Okay, so the thing about this one that's interesting is you just kind of have to read this number here. That's all it is. If you read the number, you should be fine. At-risk limitation limits a taxpayer's blank to the amount at the risk, which is the amount that the taxpayer stands to blank if the investment becomes worthless. Okay. Okay. So the at-risk limitation limits a taxpayer's deductions to the amount at risk, which is the amount the taxpayer stands to lose. Now, I know it says loss, but it stands to lose. Even the homework says loss, which actually shocks me. I didn't expect it to say that. If the investment becomes worthless. Losses or expenses generated by passive activity can be deducted only to the extent that income from all of the taxpayer's activities. Losses or expenses generated by passive activities can be deducted only to the extent of income from the taxpayer's passive activities. Yeah. Which of the following statements regarding passive activity losses is true? That would be a passive activity is one in which the taxpayer does not materially participate. Indicate whether the following items increase or decrease the taxpayer's at-risk amount. Withdrawals from the activity would decrease. Any unused passive losses are blank to offset passive income generated in those years. Okay. Otherwise, suspended loss may be used only when the taxpayer disposes of his or her entire interest in activity. I want to say are suspended and carry forward to future years. But I'm not actually sure if that's true. Oh no, that is correct. I don't know why there's a period here. There shouldn't be a period. Taxpayer's share of amounts borrowed for use in an activity involving the holding of real property that are qualified non-recourse financing. Wait. Whether the following items increase. So taxpayer shares the amount borrowed in the use of an activity involving or holding of real property that would increase. Wait. The taxpayer shares. Whoa. Where did I get this question from? Okay. Taxpayer share of amounts borrowed for use in an activity involving the holding of real property that are qualified non-recourse financing. Yeah, that would increase. Okay. What is Bing's at-risk amount at the end of the year? Okay, so this one's actually pretty easy as well. So to do this one, you just have to do the following. And that following is 30,000 minus 10,000 plus 2,000. And that will equal 22,000. At year end, Rhonda has the following: A, adjusted based on the passive activity, 8,000, 15, 12,000. Adjusted basis in the passive activity. That's 0. Yeah. Under the at-risk rules, a taxpayer's deductible loss from an activity for any taxable year is limited to the amount the taxpayer has at risk for the beginning of the taxable year. I want to say that that's false, but something tells me that's true. Oh no, it is false. Okay. Sam rents a second home during the current year. He reported a $40,000 net loss from the rental. Assume that Sam actively participates in the rental activity and no phase-out limitations apply. What is the greatest amount of rental loss that Sam can deduct against his ordinary home in the income year? I think it's 2,500. Yeah, 25,000. So the problem with these kinds of questions is that they are just hard rules. I'll look up to see if there's any like specific way to solve these kinds, because one of my biggest issues with some of these taxation questions is you just kind of have to know them. Yeah. See, the problem with these questions, yeah, I just looked it up on a website, is that this will be a multiple choice question, like the following here. But when it comes to like this kind of question, it pretty much forces you to know like rental real estate. So losses from rental real estate, if actively managed, are allowed to set off against other income up to an amount of $25,000. That's not something that you can solve for. That's just a known fact. That is my biggest issue. You're only subject to phase out when your modified adjusted growth income exceeds $100,000. Ooh, what'd I get wrong? What? I'm pretty sure I... Okay. So that is correct. But why would it not just tell me? Okay, so clearly there's a formatting problem. Okay. Let me find it. Edit. That's right. I'm the complete creator of these things. I make my own Quizlets. I don't want anyone to say that I don't do my own work. I don't actually know why I didn't write that down, but it's kind of interesting. Okay, so it's actually getting quite late. It's like 1:30 in the morning. And I've been going for about 30 minutes. So what I'm going to do is I'm going to put it here, stop here, and then I'll make one that's like 8 hours long or something tomorrow. So have a nice day.